that four-step profit formula. Why that's a brilliant tool for a business owner to understand is because, or anybody reviewing any kind of business, you can apply that formula straight away to any business you look at and identify which is the easiest area to boost the profitability in this business. So many times business owners are looking at their business and they think, I need more profit, I need to get my costs down. But often we'll find actually the costs are as low as they can be, or they're at a base level where you've actually got so much capacity, but you're not busy as you need to be. Using this formula, you can identify straight away which one of these four levers is the one that's the easiest to move. And that's the one we should focus on first to be able to generate more profit.
Hello and welcome to another episode of Entrepreneurs Rising. Today we have another interview guest on our show, and I'm excited for this episode because it's such an important topic that I think not enough business owners really focus on, because it's not necessarily sexy, or at least we don't think it's sexy. Some of us enjoy staring at numbers. That's what I'm talking about. I'm talking about the numbers of our business, the finances. And in particular, there's one number that's really important: profit. And so that's why I reached out and asked Gavin Smith to come on. And before I introduce you to Gavin, I just want to say that, if you are one of those people who sit on the sidelines and go, I know I should look at my numbers, but I'm not interested, this is the episode for you. Also, if you are someone who I'm all over my numbers, I log into Xero or MyOb or whatever you use on a regular basis, I track my numbers, I'm feeling really good. Still, this is an episode for you, because there are little tweaks and little things you can pick up that can just change the game, because maybe you're overcomplicating it and we can simplify it down even further. So let me introduce today's guest. So Gavin is the founder of and CEO of the Profit Analyst. Now, prior to founding the Profit Analyst, he was one of the leading financial coaching businesses in Australia. Gavin has been a CFO of various international brands, a commercial analyst, and a chartered accountant at KPMG. So he now owns multiple businesses and has a passion for empowering other business owners through their numbers. So I reached out to Gavin because, in particular, we've been Facebook friends for a while, and he did a post and he talked about this, the idea of simplifying your numbers for you, identifying those key profit drivers. And at the end of the day, both Gavin and I know that there are a lot of business owners that stick their head in the sand when it comes to numbers. Would that be fair, Gavin?
Yeah, absolutely. I mean, your summary there, or your introduction right at the beginning, really hit the nail on the head, in that there's business owners who don't know their numbers, so they just turn the other way, don't look at them at all, which is a shame because they're missing out on so much value. It can be helping them with their business. And then there's those who think they know their numbers as well, but still they're not actually using them. There's still something that they just look at retrospectively. I know my numbers, but they're not using their numbers. So there's huge opportunity for lots of business owners to be actually become empowered from their numbers and actually use them to really give them clear direction about the things they need to be doing in their business.
Maybe let's start there, because, what you said there really intrigues me. The idea of people might go, well, I know my numbers, but they're not using their numbers. So can you clarify, what do you mean by it? What's the difference between knowing our numbers and using our numbers?
Yeah, so I would say knowing your numbers is on the retrospective side of it. So you're looking at your numbers, but when you're looking at your numbers, you need to understand that you're always looking at historical numbers. They're not what's happening right now, or they're not what's going to happen or what we're focusing on in the future. And so I'm well aware of lots of business owners who review their numbers every month. I need to look at my numbers, but in doing that, they're reviewing the numbers so they know what's happened, but they're not actually then taking those numbers, projecting them forward, seeing exactly what's going to happen so that they can be supported in the decisions that they're making to make sure they're focusing on the right things that are going to continue growing their business or improving their business's profitability. So there's kind of a difference between knowing your numbers and looking at them, and then actually using your numbers to help form your strategies or shape the decisions that you're making about where you're going. Does that make sense?
Yeah, definitely. And I think the thing that's come up, I know for me in my journey of understanding numbers, when it comes to forecasting, because I'm pretty good at my numbers, but I would say I might fall into that camp of I'm not necessarily great at then forecasting ahead. And one of the challenges that I've come across when trying to forecast is it's kind of, you're just making it up. Like, even if you're forecasting based on previous data, like just because you had this amazing good December last 2 years, that doesn't necessarily mean if you don't do the right things, you're going to have an amazingly good December the next year. And so your projections can be off. So as you were talking, the first thing in my head was like, okay, cash flow management, like that makes sense. Forecasting for cash flow management. I know these bills and I know these things are coming up.
Yeah.
But how else might we be forecasting, and talk to that challenge of forecast in a way are just guesses, educated guesses, but how do you make a forecast actually accurate?
Yeah, absolutely. I mean, a forecast is exactly that. It's a guess, but it's a combination of two things. It's a combination of looking at your numbers, identifying what's going on within your numbers, because there'll be trends within those numbers. There'll be really obvious things like your rent, for example. If rent is something in your business, it's the same every month. That's really easy to forecast that number. If, say, your revenue has been growing every month at a certain percent, it's pretty easy to keep extrapolating that line and see where you're heading. So we can look at your numbers. What we always love to do is simplify numbers to begin with, because people think numbers, these giant long P&Ls, that you shouldn't be looking at them like that. You should be condensing them down to something much easier to look at, something much simpler to understand. But from that, we're able to see exactly what the patterns are, what the key drivers or links are within your numbers. And then it's quite easy just to, at a first step, extrapolate them. That's the first part of forecasting. So how do you do that? I mean, if you're looking at months, you literally line up 4 or 5 months next to each other. You just look at whatever it might be, the trends. If things are just flatlining, there you go. You just keep flatlining it across. And there's your base forecast to start with. So the first step of forecasting is looking at the data and extrapolating it, just projecting it forward. But then you need to apply a bit of, critical thinking about, well, what's actually going on? Has something happened in the market? Have I lost the key employee? Have I gained a new employee? Then you need to apply some of those things, but a bit of critical thinking about, well, what's actually happening? Are the numbers going to go up or down for whatever reason? So to your point about you don't really know what's going to happen, you've probably got some sort of lead indicators. Is the phone ringing hot? Are lots of leads coming in? Or the opposite? Have all the leads stopped? And therefore, actually, I would be foolish to keep thinking revenue is going to be the same for the next 4 months. My lead indicators show me that I probably need to be a bit more conservative over the coming months. That's kind of the process of forecasting. It's really, I would say, 3 key steps. First step is to simplify the numbers. So by simplified, I mean, when you're looking at a P&L, the typical P&L might be 30, 50 lines long, because it's all the accounts coming out of your chart of accounts. It's way too long. You can condense that up into five categories. It can be income, team, overheads, property, marketing, investments, the big broad categories, and just summarize all those numbers. Then it's so much easier to look at them and understand what's going on within your P&L. And then from there, once you have that simplified history, like I was saying, just line them up side by side. We can identify what the patterns are within the numbers, or if they're just straight lining, or they're going up or down. And then it's just a matter of extrapolating it. That's how you make the first base version of your forecast. And then from there, the third step would be applying some, the tools like sensitivity analysis or scenario planning. What if things go up or down? Or you could be reverse engineering. I want to get my business to double this size in 12 months. What kind of growth would I need to see across this journey to make that happen?
Yeah, so I think and that's the kind of one I've definitely done, where it's like, okay, this is where I want to be. Let's work backwards as to what does that mean that we need to be doing. And that's in our company, that's what we do. My operations manager and I will often sit down and go, this is our target. We want to hit some bonuses for the team around this. Okay, this is what we've got to do. Let's try and track back to hit those targets and motivate. And then if we don't hit it, we're trying to adjust. So that's probably the level of forecasting that I get involved in. But it's very interesting.
That's really empowering for a business owner, because if you've got that plan, all of a sudden, it's really clear for you what decisions do you need to take. Well, if we're going to hit those targets, I need to employ a couple of new talent around here. It's not going to happen. Or we're going to run out of space, or we don't have the capacity for it. It sharpens your decisions about what it is you need to be focusing on to make those set of numbers happen.
I think it helps you, notice where the problem is. Like if you're consistently not hitting those targets, it's like, okay, we have a marketing problem, or we have a conversion problem, because actually we've got good leads, but we're not converting. Like you can start to diagnose where do you need to put some focus to hit those targets better. One thing I do want to jump on a little bit that you mentioned is, simplifying numbers, which you've talked about. Now, when you're talking about simplifying numbers, are you purely playing on financial numbers and looking at financial ratios or dollar amounts or all of that? Or do you actually play with like KPIs, which are key performance activities, the kind of the activities, the drivers that drive those financial performance when you're talking about simplifying numbers? Or do you think that's a different stage and a different step altogether?
Both. They're different but related. And so when I was talking about simplifying numbers before, I was referring to simplifying a P&L. But if we are to simplify a P&L to its, and I'm going to get around to the other KPIs that live above that in a second. If we're talking about simplifying a P&L, we're getting it down to basically, at its simplest form, a P&L is income minus expenses equals profit. If we were to go a next layer down on that, we'll do the expense side of it first. There's what we call fixed expenses, or expenses that don't change, like that rent example. It's just the same every single month. Then we have direct expenses or variable expenses, so things that go up or down in line with sales. So your cost of goods sold, or if you're a service-based business, obviously if revenue is doubling, your team is probably going to double as well if it's linked to that. So the next layer down from top layer is income minus expenses is profit. Next layer down, we have 4 categories. And so there's the 2 types of expense. But then when we start to talk about the income, your income is made up of average price you're charging and the volume at its simplest level. So there's 2 key drivers there. So when we start looking at this level, so the very next layer down, there's these 4 levels. So it's the price, the volume, direct cost, and the overhead costs. So these are your 4 variables. If you want more profit, you need either of the 2 income ones, the price or the volume, to be going up, and you need the 2 cost ones to be going down. So this is a really good formula or format to be looking at a business and understanding, well, which levers can I push and pull on to make more profit? And so in particular, if we're focusing on that income side, which is all about price and volume, well, the next step under volume would be, okay, how many leads am I getting? What are my conversions? What are the things, the activities that are driving volume? Because that's when we can go the next step up and start identifying some KPIs for that.
Yeah. What I really like about what you just said, and I hope, maybe what we can do is take some of what you did, turn it into a graphic or something and add that in the show notes, unless you've got a resource like that. Because instantly in my head, I was visualizing, I was like, yeah, the power of being able to go, these are really those 4 bits to look at. Like, as you said, your income is ultimately made up of average revenue per user. Like if, for a subscription business like me, it's average revenue per user or client. And then the number of clients we have, like that's ultimately what drives what income is. Yes, we've got some one-off sales and stuff that we could throw in there too, but really that's from a subscription point of view, that's what we're looking at, which controls our income. And then, as you said, you got then these different elements of expenses to look at as well. And as long as the income ones are going up and the expenses ones are either staying still or going down, ideally, you're improving profit. That's just, it's so much more simple than a standard P&L. You're looking at it. Here's all the line items that your bookkeeper or your accountant has sent you. And you might look at that and go, yep, I understand. Like, I understand it quite well, but there are a lot of business owners that I've met them. They were very successful. We're talking $1 million businesses. And I was shocked. There's one guy in particular, I won't use his name. I was shocked to discover that he didn't really understand how to read a P&L. And he was doing like $1 million a year, very successful. And I was just like, what?
Yeah. So our clients range typically between 1 million on the upper side, maybe 10 or 15. And across that spread, I would say 90% of them are coming to us because, they're admitting, look, I really don't know my numbers at all. I've been able to build this fantastic business, but the numbers are always a black spot for me, or they're holding me back, and they're not being able to use the power of their numbers and what that can do for them in their business. That profit formula, that 4-step profit formula, why that's a brilliant tool for a business owner to understand is because, or anybody reviewing any kind of business, you can apply that formula straight away to any business you look at and identify which is the easiest area to boost the profitability in this business. So many times business owners are looking at their business and they think, I need more profit, I need to get my costs down. But often we'll find actually the costs are as low as they can be, or they're at a base level where you've actually got so much capacity, but you're not busy as you need to be. Using this formula, you can identify straight away which one of these 4 levers is the one that's the easiest to move. And that's the one we should focus on first to be able to generate more profit. When you're talking about a subscription-based business, potentially they've already invested the time in building the business, building the services that they need, and actually it's ready. It just needs far more volume coming through it to be able to generate the profit, or their price might be capped. Often people are like, well, I can't do anything about the price. I can't put the price up. So my income is capped at that level. And that's not the case, because you need to know income is price times the volume. So actually it's the volume we need to focus on. And then you can start making assessments. Well, maybe I should invest more in marketing activities, or what is it that's driving that volume metric for me? What can I invest in or change within the business to grow that one aspect? And therefore that results in more profit. So
Yeah.
it's different for every business we look at, but under that framework, you can generally see straight away which one is the easiest one where we're going to get the quick wins to be able to boost.
I think that's important for everyone listening to understand too, is the power of numbers. They may not tell you the answer, but they point in the direction to investigate, right? And that's what I like about these the four numbers you're talking about. Just give you the, okay, I've got a direction of where I should investigate and start thinking and going, okay, what else could I do to increase average revenue per user? Okay, like for example, if I think about my business, we've got clients who are grandfathered in at the original price that they started paying 8 years ago, right? They're ridiculously getting good deal. We could, I'm not saying we will, but we could go to those people. Instant way to increase our average revenue per user would be to go back to all those grandfathered clients and either bring them in line with current retail pricing or even just increase them slightly from the old grandfathered price. And that would be an instant hit on profit because our cost to deliver doesn't change because we're already still servicing them. Like those are the kinds of things that can come to mind once you know what you're focused on trying to improve, which I really love that. I love that.
People are very nervous to put their prices up, but we need to understand that you can apply a matrix, if you like, whereas how much I put the price up, how much am I attritional, how many people am I able to lose and still come out at the same place? So if you're putting your prices up by 10%, you can probably afford to lose 10% of the people and you're still in the same position. So
yeah,
it's worth bearing in mind because often we'll have, a business with 100 users, 500 users, whatever it might be, and we're nervous about the price increase that might lose 5, 10 people, 20 people, but still you'll be so much better off by the overall volume going up. If that makes sense.
Yeah, 100%. I know exactly the table you're talking about. I've seen it numerous times. We can maybe try and link to it in the show notes if we can find it. But otherwise, guys, if you just go to Google and search like price increase, and there's also another one for discounting. Like if you think, I'm going to do a discount of 20%, it shows you how much more in volume you actually have to sell to make up for the discount that you're doing. And when you see that, I first saw it when I was 21 years old, I think I was. The first time I saw this discount matrix, and it was the thing that really clinched it for me of like, I never want to discount ever again. Because you just start to see like, I'll just do this to get them across the line, and you realize, actually that's making my business way harder. So Google, if you want to Google that, there's like a discount matrix, but the price increase one is really cool. We'll try and link to the show notes if we can find it. Otherwise, definitely hit Google on those. So we've talked about simplifying the P&L, which I love how you've done that there. What would be one of the next steps you would do if you were engaging someone going, I'm trying to get control of your numbers? We've simplified the P&L. Where would we go to next?
Yeah. So once you've got a simplified P&L, it's all about identifying what we call them business drivers, but what are the key things that your numbers are showing you about your business? So for example, I talked about condensing a P&L down into 5 categories. And so the 5 categories we love to use are always what we call cost of goods sold. These are direct costs, our team costs, anything staff related. Our marketing investment, we always want to highlight that on its own because we want to see how much we're investing to grow the business. Our property related costs, if you have rent. And then the last one is actually just a catch-all. We call that operating expenses, and literally something, if anything that doesn't fit into one of those other 4 categories, it goes into there. So once you've put your P&L...
Can I ask a clarification there on the team one? Because a business like mine, we count some team members, what we refer to as direct labor, in our cost of sales, right? So we have cost of sales, but then we also have direct labor, which comes under more like, that's the labor, as you talked about, for a service business, we're selling, that goes up the more we're selling. And then we've got other labor, which is a bit more fixed, leadership team, management team. So when you're referring to team, is this more in the fixed expenses side and cost of goods sold is encompassing that direct labor, or how do you think about that?
The proper accounting rules are you should be doing what you're talking about doing, separating them into fixed sort of overhead ones or putting ones up above the line, above gross profit, the ones in the direct costs, if they're related to that. To be honest, I'll use a mix of both, depending on what it is. So typically I prefer just to actually put them all in the one place because in my eyes, the less numbers on the page, the better. When it's more simplified down, we can understand it more easily what's actually happening. So 9 times out of 10, I'll put all those team in one line item and just call it team because I prefer to just look at the total team cost, be it some of them are admin or type roles or some of them are direct client servicing related things. but I prefer just to see it all in one line as team. But if it really makes a difference to the business I happen to be analyzing, that they're really, directly tied to revenue in some sense, then I might put them into the cost of sales.
Okay.
I'm not quite strict on the accounting rules. I prefer to tease out whatever's the right analysis we need for the business. But like I said, 9 times out of 10, I prefer just to put them in one place and call it team and look at the total team cost. So once we've got a summarized P&L, those 5 key numbers, if we could put, doing the trend analysis, so lining them up side by side so we can see what's going on within the business. So we're looking at a P&L with multiple ones side by side. There's 3 key things we need to do to be able to understand the numbers really well and project them. So the first one is ratio analysis. So of that cost category divided by the income, how much does it represent? The reason we're doing this is because we want to identify where the bulk of the business is. So typically a service-based business, that team component is going to be the biggest number on their P&L. So it might represent 50% of all income or 60% of all income or even 80% of all income, depending what it is. And so we want to identify which are the biggest areas within our P&L. The reason we're doing that is because it sharpens our mind or our focus about what areas actually make a difference in this business. So if the team cost is the biggest cost, it's 80% of the business, that's where you want to put your efforts to get the most amount of gains in terms of cost control or management or reviewing your numbers to make sure you're profitable. So I've come into many businesses before where the business owner will be focusing on, I need to get costs down. I'm focusing so much on my overheads. And then you look at the P&L and the overheads only actually represent 10% of the business. Meanwhile, there's 70% caught up in the team and the team is not being managed effectively. It's not being run well. And it's obvious where all the money is going in this business. So by looking at the ratios as a starting point, it tells us where the bulk of the business is. A quick analogy I love to use here to really make this come home for people when it sounds like it's still accountancy is if you imagine I've got a pizza and I'm giving you a pizza wheel and you get to cut that pizza into 6 slices. So the first 5 are going to those big broad categories of costs that I've talked about, team, COGS, rent, overhead, marketing. And then the last one, the 6th slice, what's left over is yours. So if your team is 60% of the business, that's the first cut of the pizza. You over half of the pizza cut off, hand that to your team. The next slice you cut off and give to your landlord. The next slice you cut off and give to your overheads. And in the end, you sort of get down to these little slithers of what's your slice of the pizza sometimes, if you're only making a couple of percentage points. And it really, first of all, it shows you how little of the pizza you're actually taking home for one, but you can see who's getting the biggest slice. And you start to think, well, that's where I really need to be, my part of my slice is in that piece. That's the piece I need to work on right now.
Yeah.
So that's the ratio component to it. The second part I said was just looking for the trends. So, once you've got a few numbers side by side, you can see, is my team cost, if that's the biggest cost in your business, has it actually gone up? Has it gone from 50% to 60 to 70 to 80? These kind of things tell you, well, we're getting more or less inefficient with our team, for example. So you start to see the key trends. And then the third step of it all is identifying what's fixed or variable. And why this is, and by fixed, that's the rent example. The fixed cost, it just stays the same, regardless of what's going on in the income, it's the same. Whereas the variable cost, the things that move up and down with the team. The reason this is important, because this is how we extrapolate the numbers. So variable costs, if we're extrapolating an income line going up, the variable costs are going to keep going up with it, whereas the fixed costs will keep staying the same as we go along. This is important because this is how we can see, right, if I can scale my business, this is what my profit will be. So it's 3 steps of understanding the ratios, the trends, and the fixed versus variable that enables you to really know your numbers really well. And that takes you into the final step then, where you can start to use things like a proper calculator tool or a forecast model and see exactly what it is you want to be focusing on to improve the profitability of your business.
And if we're talking about forecasting, do you forecast 12 months in advance? Like, what's too short of a forecast?
Well, by standard for our clients, or the work that we always do, and all of my businesses, they all have a 5-year forecast model. So there's always 5 years, the business going out on a month-to-month basis for 5 years off into the future, so that we can tie it back to the bigger picture of the business, the bigger purpose that we're trying to aim for. But from there, we have a 5-year journey, but in particular, we're really focusing on the next 12 months because that's the actual decisions we're making right now. And, that's, if we can see what we can do over this first 12 months, is that the right trajectory that we want to be on as part of that bigger picture, part of that bigger 5-year journey? So to not go too academy here, but we need to understand there's a difference between P&L and cash flow. And there's a difference between P&L forecasting and cash flow forecasting. And so everything I've been talking about is all about P&L forecasting. I can touch on cash flow separately.
No, yeah, I think it's worthwhile. Like we have, I think there's at least 2 other episodes. There was one I talked about, your profit is not your business, and I think there was also another one I talked about business financials, a couple of episodes back, and I did talk about the idea of, well, at the end of the day, cash flow is what's going to kill or save your business. You can have a highly profitable business and still die because you haven't managed cash flow well. I talk about the JARS system that I personally use, profit first type methodology of bank accounts as well. But I'd definitely love to get your take on cash flow versus profit and how you maybe communicate and explain that.
Yeah, sure. So at a high level, we need to understand that there's what we call the finance ecosystem. There's 3 distinct areas of numbers or finance within your business. And we need to be knowing and understanding each of these numbers. They're all separate to each other, but they're all related to each other. And so the 3 areas are P&L, the profit and loss, which we've been talking about, the income and expenses, how much profit are we making. There's our balance sheet, which is often ignored by many business owners, but it's all about our financial health, our financial position. So just like your P&L follows this basic formula of income minus expenses equals profit, your balance sheet is assets, things that you own, minus liabilities, the things that you owe, and what's left over is yours, your equity, your net worth. So it's very important to realize that there's these 2 distinct sets of financials where we're all about P&Ls and trying to make more profit in our business, but where is that profit going? It goes into our balance sheet, and our balance sheet represents the financial health of the business, our net worth, what's going on. So if we're growing and scaling a business, not only are we focusing on profits, but we're knowing our resources as well the whole time. Do we have enough resource to invest in this? What is our financial position? Are we keeping liabilities under control while we're trying to maximize the growth of the business? And then the third area on the ecosystem, so we've got P&L, balance sheet. The third area is cash flow. And the reason cash flow is looked at completely separately from P&L and how it interacts with both of those is because, firstly, if you're comparing your P&L to your cash flow, it's all about timing differences. So when you look at a P&L, which is all about income minus expenses, you can go down your P&L and right next to it, like I actually challenge you to do this as an exercise, look at your P&L, go down it, right next to it, the timing differences of when that money comes in or out of your business. And oftentimes you'll come to realize that, this money doesn't come in for a few weeks. I've already paid that months ago. Staff, for example, you might pay someone their net pay today, but their taxes and PAYG you don't pay for 3 months down the track. Their super you pay 1 month down the track. If you're buying things on account, you're recording the expense now, but you're not paying them for a month's time. And it's right the way down your P&L is these timing differences. And that's why we need to have cash flow looking separately to what's going on. But then the link between cash flow and your balance sheet is that oftentimes people have transactions going on, what the accountants would refer to them as non-P&L transactions, which are movements on your balance sheet that don't show up in your P&L at all, but they're coming out of your bank account, so they're affecting your cash flow. And the common example of this is paying a loan. If you have a loan in your business, what happens? Cash comes out of your bank account, goes into the loan to pay the loan down. That repayment never shows up on your P&L. Yeah. Or oftentimes business owners are taking money out of the business. They're paying themselves as either a loan or something. Again, it's not recording the expense, they're just taking it out. And so this is also impacting the cash flow. They're
looking at their profit and loss and they're going, look, I've got all this profit, not realizing that, I'm taking money out and that's not represented there, or I'm repaying a debt or a loan, and only the interest component is going to show on your P&L. Everything else is going to show on the balance sheet. And if you're not paying attention to that, at the end of the day, that cash flow is where you're going to get into trouble.
So the quick sort of rules when it comes to doing a cash flow forecast, which is totally separate from what we talked about with the P&L, to do a cash flow forecast, first thing is make sure you're doing it weekly, not monthly, because on a monthly basis, looking at your cash flow, you miss all the highs and lows that are going on. And this is what gives us the emotional roller coaster ride as a business owner. When you look at your bank account and there's nothing in it, you think you're doing bad. Then you look at it, there's heaps of cash in it, you think you're doing well. The reason we need to do it weekly is because all these cash outflows from your bank account are on different cycles. So you might be paying your team weekly or fortnightly. You might be paying rent or other sort of subscriptions on a month-to-month basis. If you're in Australia, you're going to have a BAS report probably landing every quarter, which is a big GST, a big PAYG payment. All these different cash flows that are going in and out of your business are on different cycles. And this is what drives the fact that everybody's bank account is like a roller coaster ride going up and down. So I've got some businesses that make a very steady profit margin every month. They're exactly the same. But if I was purely just to look at their bank account, it swings like crazy, like just because of these timing differences of where nothing will go out for a few weeks, the bank balance builds up, and then all of a sudden all these things land in 1 or 2 weeks and it comes crashing back down again. And this is where, unfortunately, business owners who aren't reading their financials, this is how they manage their business. They manage it by the bank account. And what they don't realize is that it's not giving them any true indication of what's going on. If for one, it's giving them a heart attack because they're on the roller coaster ride and they think that's representative of the business, but they're also missing, what are the key commercial activities within my business that make it tick? Which area should I be focusing on? The bank account gives you no future vision of the money that's coming out. You don't know what your huge liabilities are. You're missing so much by just only looking at your bank account. And it's really challenging then to know what to focus on to improve your business as well.
And the problem you've also got there is, business owners who are staring at their bank account going, oh, I'm doing well. Look how much money's in the bank. And they go and take it out and they buy a jet ski or a new car or take a holiday or whatever, or go, I'm going to throw that into my personal mortgage, whatever it is that they choose to do with that money. And then 2 months later, all of a sudden the BAS is due or something, and they're scrambling going like, oh, I didn't know this. Or even just they've got an annual subscription that they forgot about for some software that's quite expensive, or a coaching program that they paid for annually, and all of a sudden they're like, oh, wait, I didn't think about this. I don't have that money. So it's why you just cannot be in the mindset of the money in my business is my personal piggy bank. You cannot think like that. You're just going to set yourself up for trouble.
This is why the balance sheet is so powerful. We need to be able to look at our balance sheet and identify straight away what are the key amounts I owe, because that GST bill that comes around and shocks everybody every 3 months, it's on the balance sheet the whole time. You can look at it on any day and see exactly how much it is. You can know what your GST bill is months in advance before you actually have to pay it. So and then once you have the cash flow, back to having that mapped out on a week-to-week basis. So to do a cash flow forecast, it's the same thing. We need to line up some historical weeks side by side so we can see what's going on. But once you've got a few historical weeks of the money going in and out of your bank account, this is where you can see the pattern. You can see the things which are fortnightly, monthly, quarterly. So it becomes really easy to extrapolate those out. The formula is basically closing 1 week equals the opening the next week. Money in, money out, closing that week, opening next. So we can, again, all of my businesses or any of our clients, we have their cash flow, their bank balance mapped on a weekly basis, 12 months in advance. And the beauty of that is, the highs and the lows a long time before they come around. So you never get the shocks. You're not living day to day by your bank account.
And this brings me to, I think, a really important point that I can imagine. I know if I was listening to this, if I was not here interviewing you, but I was actually listening to what was being said, I go, all right, that all sounds really good. You've sold me on the power of having my cash flow forecast and looking at my cash flow and all. So it all sounds good, but it sounds like a lot of work, weekly having to run this stuff. Like, so how do I automate it? Do I just hire someone and delegate that to them? Or, can I get all of this in my software, like Xero or whatever? Or obviously, we can work with someone like you and we'll talk a bit more about, how they can find out more about what you can do for them. But how do we simplify this? We're busy business owners. We're trying to run a business. We're doing sales calls. Maybe we're still involved in delivery. Hopefully, if you've been listening to this, you're getting yourself out of delivery. But we got a lot on. We're not sitting around going, cool, that's another thing to do. I can imagine sitting here going like, all right, I hear the importance of this, but to be honest, it's low on my priorities list because that just sounds hard. How do we make it easy? How can we make it so I just look at the numbers and I don't have to do any of it?
Yeah. So great question. Short of recommending my own services, because this is what we do for people, is how do we make this process really simple and easy? But there's some things that you can invest a little bit of time in. And once you've done it, they become, it's set up for you for life. So for example, when I talked about simplifying your P&L, this is actually a feature you can do in all the accounting systems, Xero and stuff. So you can go into your P&L, custom layout, something down the bottom, edit this template, and literally just insert a heading, put all of the accounts underneath it, make a summarized version, save that view as. So every time you're going in to look at your accounting software, that custom layout is already there. You don't have to keep redoing that work. So you can instantly look at your P&L or your balance sheet, exactly the same. You can make a summarized version of your balance sheet. So they take a little bit of investment of time and effort, but honestly, that's a half an hour job at max to basically make a summarized version. And then every time when you come to look at your numbers, you're not overwhelmed with detail. You probably with most P&Ls, you can't see the wood for the trees because there's accounts on there for days about the printing and the postage and all this stuff separate that just, who cares? Like, it's so minor in the context of the business. Group it up to what actually matters, and then that will help solve that one. The cash flow forecast, getting one of those in place, again, it's going to take a bit of investment, of effort in time to do it. You can either outsource that to people like us, or there's other people out there who offer this service, or you can do it yourself. It's a matter of just setting the spreadsheet up for the first time. However, with that one, you do want that done for you every week. You do want to keep looking at your numbers or having them updated on a week-to-week basis. So it would be something where you would want to create the SOP for your bookkeeper or your team member so that they keep that process updated for you and have it live for you. So, for example, for myself, probably got about 10 businesses of my own that on Monday, my offshore talent updates all the cash flows for me, and they're all updated. So by the time I come around to looking at finance and what I'm going to have to pay and stuff, the cash flow is already updated for the week. So it took work to get there, but
so they've updated. So they've updated to the actuals, and then they've updated what they see the forecast being based on. Correct. That. Got it.
Correct. I mean, because the forecast, again, it's all just following the patterns. So they don't know anything different that's happening in the business, i.e., I'm going to buy some new equipment, or I'm going to go on a travel or something that they don't know about. So it's up to me as the owner of the numbers and the controlling the cash to actually amend the forecast as I see fit. But it's somebody else can do the legwork in terms of getting the numbers in, getting it reconciled, keeping the forecast based on what's going on in the history, and map that out for me. So those kind of things are done. Yeah.
So I can imagine that, those things when you're saying, like, if a decision's being made, you're hiring new staff, or you've invested in this thing that's going to impact cash and profit, the forecast, you either, as you say, you go in there and adjust the forecast, or if you've got someone who's responsible for this, outsourced, insourced, doesn't really matter. You just have to inform them. And ideally, if they're good, they're going to know what they're doing and be able to update those forecasts for you. So let's, there's two things I really love before we kind of close this up. I definitely want to get to kind of the services you offer, because I think that's going to be super valuable for people to understand. But also, you've mentioned you've got 10 different businesses. On this podcast, we are very much the type of people who are like, how do we build wealth? How do we use business as a vehicle for wealth? And that can come from having multiple businesses, right? Being in that leadership and owner level rather than in the day-to-day. So love to hear a little bit about, you've got 10 businesses. How are you managing 10 businesses?
So to start, I would say the key thing is none of my businesses I own myself. I have partners in all of these spaces. So, and the beauty of that is I get to bring to the table finance and numbers and strategy and reading the numbers and, forecasting and those key skill sets, which come from my background of being an analyst, being a CFO. That's what I bring to the party. But for example, I'm involved with some bars with a couple of mates, and that partnership works so well because one of the guys is a hospitality guy, so he loves the hospitality. He runs the team, he runs the menu. It's really clear delineation of what's his jobs and his roles and what are my roles, and so that partnership's worked really well. We purchased a bar that was a loss-making bar, and fast forward 5 years, we now own 2 bars that are doing really well and starting to look for our 3rd location already. And it's helped in part because he's fantastic at what he does in terms of the hospitality and the vision for the brand and the services we offer. But throughout this whole journey, we've always had our numbers to be able to support us in what decisions we need to focus on. Our cost of goods sold are too high. Our staff costs are too high right now. But if we can improve them here, we'll be making this much sort of profitability over this year, which is part of our 5-year journey. And at point X, that's when we'll be able to invest in a new location. And that's the pathway we've gone down. The numbers have supported us to be able to identify when we can roll into another venue. And we're already, the new venue is only 6 months old, and we can already see from that, okay, this time next year, we'll be looking for number 3. So let's get things in place within the business to be able to support that when it comes around.
And so what I love about what you've done there, and I really hope, listener, I hope you caught that. He's got 10 businesses, but he's not doing any of the operationalness of any of those businesses. He's purely running the game, and he might correct me if I'm wrong in anything there, but he's purely running the game of the numbers, which is that leadership and ownership level that we kind of talk about in some previous episodes, where you get to a point where you're playing the game of business and finance, really. And you've got these amazing business partners who you can then talk about, hey, these things need to happen, and you strategize about what might need to happen. But because your financial controller background really sets you up to sit in that position of just playing the game like a chess player of finance, which is what business is.
I should clarify, I don't have 10 businesses. I have 3 businesses, but within those 3, there's multiple entities. So one has 4 businesses, one has 2 bars, things like that. So what I meant was there's about 10 bank accounts in the suite of businesses I look after that I need to be keeping an eye on. And that was back to my offshore talent updates all the bank accounts for us before I come around to looking at them, before I pay any bills, that all the things are already updated in that regard. Through our client base, so again, we've got multiple clients, and it's the same. This is part of the service we offer for them. On Monday, we're sending them all their cash flows. They're all updated. The reason we do cash flow weekly and send that weekly, and the reason I look at my cash flow weekly, is it enables you to make those quick decisions as and when you need to. So back to an example of the bar, we had an oven blow up recently. We had to buy a new oven on the spot. It's a busy trading, high turnover place. We needed a $30,000 oven in there this week. Straight away, I'm able to open my cash flow and see the high points and the low points in the bank account for the next 2 to 3 months, and straight away see, is that going to cause us a cash crunch? Like right now, the bank account had, in that example, it had $70,000 in it. And I remember my partner was like, can we just buy this oven? I need it today. I'm like, just give me a second. In 3 weeks from now, we're getting down to 30,000 because we've had a BAS payment and stuff. So, we're going to have to manage this through whatever. So it just enables you to make those really quick decisions, and you're not fooled, like we were saying earlier, by how much dollars are in the bank today and thinking it's all yours. You need to know exactly how much money in the bank is actually yours and how much of it is somebody else's, which will be going out over the coming weeks.
Well, I can give a personal example that even for me just happened this week. I've got a platinum Amex card, and typically the Amex business platinum card is a charge card. It's not a credit card, meaning you pay it off in full every month. But it does have an option where you can pay just the minimum amount due, and then the next month you've got to pay it all. But it buys you some extra time. You pay a little bit of interest, and I went to go pay it, and I initially had it set up to pay in full. I was going to pay it all in full in a couple of days. And then I was looking at what was coming up, and I was like, hold on, I know we're about to pay out some, we have for our team, we do like vacation leaves can get converted if they haven't used them at the end of the year and turn into a cash bonus. And so we're about to pay that out. Plus, I knew that we had another BAS that we hadn't fully paid for. And it was just all of a sudden, I was like, oh, actually, this is going to, if I pay this in full, like we normally do, which we do most months, this is going to get tight. So I made the decision based on that to go, you know what, I'm actually going to pay a little bit of interest this month because the cost to pay the interest for managing that cash flow over that period is better. Yeah. And that is the power, as you say, like that is the power of being able to make a decision to look at, okay, I need that 30,000, you didn't have a choice. You needed that $30,000 oven. I needed to pay that credit card. However, I had a choice. I could pay the full, I think it was like 50 grand off it, or I think I was able to pay like $700, right? There's a big difference. I'm going, I'll pay the $700 right now. I'll delay the payment till later so that I'm managing that cash flow. Similarly for you, go, yeah, we're going to pay it with cash, or we're going to pay it something else. And I did similar with a car. I just bought a car recently. I had the cash. I could have paid for it in cash, but I chose to finance it. Why? Because opportunity costs and other things of managing that money. So really powerful. So let's bring this to a close and talk a little bit more about what you actually do for clients. And I know before filming, we were talking about this profit calculator that you have too. So maybe talk us a little bit about that profit calculator, where we can get it, what it does, and then tell us a bit more about what you do for clients on a day-to-day basis.
Yeah, sure. So to talk about the profit calculator quickly, it's a very simple and easy to use tool, very simple to understand visually for any business owner to get it straight away. But it's so powerful in showing you exactly what the true profit potential of your business is. So how it works is we identify these 5 costs for your business that we've talked about already, the 5 cost categories. We put those at the top and we identify whether they're fixed or variable costs. Then running down the page, it shows us increasing increments of income. So we can see what our profitability would be at the higher levels of turnover. So this is all controlled with a few sort of buttons at the top that you fill it in. But where this becomes really powerful is you can straight away see, well, of the variables I can play with on this page or when I put them in, which ones I really don't have any control over and which ones I can control, i.e. marketing and spend, team costs, what the level of income is, those kind of variables. And then you start to be able to see, well, essentially it's just like playing with dials, which ones do we turn up or down? We can see straight away how much profit we could be making. And so pretty much in every business we look at, we tend to find either one, at most, maybe two things which are really the biggest drivers of profitability. And so it becomes really clear, well, if I can just focus on that topic, that KPI, this becomes one of the key performance indicators for the business that they're really keen to monitor after this session, because they can see how much profit is available for them if they can just take their business to the next level of income, or if they can wind their staff costs back from 70% to 65, or whatever it might be that we identify through the calculator. And then you're actually looking at how much profit you're making each year, or how much extra profit you could be making every year. And so you mentioned earlier on about profit first and the profit first mentality.
Yeah.
So it's a great first step for business owners who are starting out. But one of my key frustrations with it is it works on the premise of revenue minus profit equals your expenses. And it's all about getting your expenses down if you want to maintain this level of profit. My problem with that equation is it doesn't help you scale a business. And so it should actually be written. I did even reverse the formula again altogether, and it should be expenses plus profit equals sales, and it's like most of the time, the answer is not getting costs lower. Most of the time, the answer is actually getting revenue higher to make businesses more profit. So, and again, through this calculator, we can identify, is it volume? Is it price? Does our business have the capacity to deal with these higher levels of revenue? And so it becomes really clear what action steps we need to take to get ourselves to those high levels of profit. And through this conversation, typically it's around what's the bottleneck? What's stopping us from doing this volume? And it'll be, well, I need another team member. Okay, why don't we have one? Wages have gone up at the moment. This person's really expensive. Okay, but this really expensive person is stopping you from earning, 3 times the amount of profit over their wage if you had them in. It becomes really easy to see what the profitability is on the other side of solving that bottleneck. So this is where I say it's just a really powerful tool to be able to basically see the future of your business. If we solve this bottleneck that takes us to the next step, which will cost us X, and we can put X into the calculator, so we've factored in the cost, but we can see straight away what profitability is available out of my business just by solving 1 or 2 bottlenecks.
Yeah, I love this. Like I imagine, like as you're talking, here's what I imagine. The dream, if you're at the investor and leader level in business that I talk about, the dream is you're kind of sitting in this control room and you're just pushing buttons, right? Like you're like, okay, this business needs that. I push this button. Well, what are you pushing buttons about is what's on the screen. What's on the screen? It's what we've just been talking about. It's what Gavin's talking about, this calculator where these numbers, if you've got nothing out of this episode, understanding these numbers is crucial for you to be able to respond and forecast and plan and make those decisions, which buttons to press. It's otherwise you're making decisions blindly. You can make strategic decisions about strategy and product and all of that stuff. But at the end of the day, whether the business is functioning as a profitable business that's going to produce wealth for you inside your business, growing in value, but also cash you can pull out and invest in other areas, comes down to you knowing what these numbers mean so you can make a better decision. And that's what I love about what you just described with this calculator. And so I guess, where do they get it?
Yeah, so well, the profit calculator, we give that away for free. I'm fairly certain, but not 90%, but the link is just www.theprofitanalyst.com/theprofitcalculator, and you can find a copy there to download. Chances are you may have seen our ads on Facebook. Download a free profit calculator tool, which is out there. So we love giving it away. It's a super simple tool to use, like I said, but it's so powerful for everybody. We give that away, but oftentimes lots of people like to book in a call with us as well. We do offer what we call a free profit game plan call, which again, you can just book in straight through our website, which during those profit game plan calls, we work through the process I talked about today. So we take a look at somebody's numbers, we simplify them down so they're really easy to look at, which we always put them into charts. Charts are so much easier to understand your numbers. Visually, you can see exactly what's going on. From there, we can see straight away, what are the key drivers within this business? We put those into the profit calculator, and we help people to see what the profit potential is of their business. So we're showing them exactly what they could be getting out of their business. And through that process, they're able to walk away with a couple of key action steps about what areas they should focus on as their next best steps, essentially, to be able to make more profit out of their business. And then in terms of what we offer as services, we have a range of courses which will be live within the next week or two. So those courses are numbers simplified, profits simplified, balance sheet simplified. So a whole series of courses basically making numbers really easy for business owners to use. So yes, we're accountants by background, CFOs by background, but we're now business owners. So we've been able to cut through all that, and we know what it is that business owners need and what you want to just leave to your tax accountant to deal with.
Which is rare. Let's be honest. There's a lot of great accountants, and don't get me wrong, I love accountants and CFOs, but the understanding of the realities of day-to-day business isn't always understood by accountants. And so the fact that you know both is great.
Yeah, I like to liken it as what's commercial reality versus what's spreadsheet fiction, because anybody can make a forecast that just says, oh, here you go, more profits, off you go, well done. But, I can make a spreadsheet tell you whatever you want it to tell you, but you need to be able to bring that back to the commercial reality for that business owner. What's actually going on within their business? What is their capacity? How does it work in terms of their team to revenue? Is this actually a real forecast or a real avenue for somebody to focus on to grow their business? And then the final piece of the puzzle in terms of what we offer, we have a program called Profit Insights, and this is our main program that we offer for business owners who are 7-figure plus. And through this process, we essentially create somebody's 5-year forecast model. We create somebody's weekly cash flow forecast model. Every week they get their cash flow sent to them. Every month they get a dashboard which highlights not only what they have done, but where they're going for the rest of the year and how does this tie into their 5-year vision. And we're having quarterly strategy sessions where we're always deep diving into people's numbers, giving them the insights from the numbers so that they're able to make those data-driven, data-supported decisions as business owners.
Yeah, that's great. It's almost a bit like a fractional CFO potentially is what kind of comes to mind as you describe that. And I think that's amazing. And I do want to jump on one thing and make sure everyone heard something that Gavin said a little bit earlier when he talked about the profit first mentality and what he thinks it should be. Because I love that. Expenses plus profit equals sales.
Well, that's one way we say
I love that. I actually think that, because you're right. The value of profit first is like, hey, you're probably overspending. You need to look at your stuff. And I think it's important to go, okay, cool. What profit do I want? And this is what my current revenue is. Well, this is what I probably need to get my expenses down to. But you're right. Sometimes restricting expenses is not growing your business. So to be able to then, it's almost like you got both. You start with profit first, and then you go, okay, cool. Well, now I've got myself into, if I was to reduce it, I think in my example in my previous episode about this, I said, oh, you got 100 grand in income, you're wanting 70 grand in profit, which means your expenses have to be 30 grand. That may not be realistic to deliver especially if you're in an agency services. A coaching business, you might get away with it, but in a services business, that's very unlikely. So at that point you go, okay, well, I have 60 grand in costs. I want to have 70 grand profit. So therefore I need to have $130,000 in revenue. We need to add $30,000 in revenue to hit my goals. I love that. I think that's a really cool way of changing it up. And I'm going to take that on board for myself personally.
Profit first is a great first step for people. It's, if you're starting out, numbers are confusing or overwhelming. It's a great way to help people stay out of trouble, set up these accounts, put money aside for tax, things like that. It works really well. But I always liken it to, you've gone to the mountains for the first time and you're spending the whole time at the bottom with the ski instructor holding your hand. You've got the bumpers, you're very safe, you can't really go wrong, but you're not exploring the mountain. You're not going to be able to grow and scale your business to the heights that you want it to be unless you learn to read, understand your numbers, and then actually be able to use your numbers to help grow and scale your business. Putting a profit first in place is a great first step, but if you're going to continue operating in that basis the whole time you're growing your business, you're going to be growing much slower than you could be if you actually learn how to use your numbers, how to read your numbers, because you're just, sitting there with the barriers up, with the safety bumpers on, not actually seeing what's going on really within your business.
Look, I think based on our conversation, we could keep going for hours. But I am mindful of time. I want to keep this short and sharp. So Gavin, thank you so much for coming on and helping illuminate numbers for business owners. Make sure, guys, if you didn't write it down, it's theprofitanalyst.com.au from memory.
No, just .com, and so just theprofitanalyst.com, and on social media it's just @theprofitanalyst to follow us on socials.
Well, we will have all these links. If you haven't been able to write it down, or you just want to go on somewhere simple and click, you can find the show notes for today's episode at rising.show. You'll find the show notes for today's episode, plus all of our previous episodes as well. So those links will be there. We'll try and also have the links off to those matrices we talked about of the price increase and the price discount matrix. We'll have links off to all the socials, all the links, the profit calculator. So if the link he shared was the wrong link, you'll be able to find the accurate one on there. And obviously they can reach out and email you or contact you through your website as well, and just let him know that you heard him on this show. Guys, if you've enjoyed today's episode, or if while listening you were like, wow, I really think my dad needs to know this, or my sister, or my uncle, or my best friend, or this dude I met at a conference that was really struggling with his numbers, then send him a copy of this episode. If in your favorite podcasting show, there's usually a menu somewhere, ... or if you're listening on the website, find the URL, copy link, and send it across. Send them a message on Facebook, send them a text and says, hey, I was just listening to this and I thought of you. Here's the link, check it out. Because the best thing you can do is not just listen to this and implement it in your own business, but then share it to others who could really get value out of this. And if they like it and they want to work with Gavin, amazing. But if not, at least they get a lot of value out of what's been shared here, and they implement in their business and start to upskill around finances. Because I think we've said it a lot, but I think one of the biggest things holding so many entrepreneurs back in their ability to succeed is they tell themselves the story that I'm not good with numbers, I'm not good at this finance thing, I just don't want to deal with it. And that mentality, if I'd held that, I was very fortunate to learn how to manage numbers at a very young age and early in business, but not enough entrepreneurs have that. And as soon as you understand it, as we talked about, you get to be in that control room, sitting back, looking at the different numbers, knowing what numbers to look at, making better decisions, and that will help you grow and avoid some of the disasters that can happen when you don't know your numbers. So thank you so much, Gavin. Thank you for coming on this episode. Look forward to connecting more with you. And also, if you've enjoyed this podcast and you've listened to previous episodes, please also rate us. Check out your favorite podcasting app and just leave us a star review. Make it honest. If you love it, give us 5 stars. If you hate it, give us 1 star. Give us a rating. And if you'd like to add a comment, that would be amazing too. Otherwise, as we said, you can find us on rising.show and all the show notes, everything else you need there. Until the next episode, keep on the journey.
You've been listening to Entrepreneurs Rising. Thank you, dear listener, for tuning in. I appreciate your time and look forward to connecting in future episodes. If you would like show notes or any resources from today's episode, you can find them at rising.show. Rising.show. You can find show notes for this episode and all other episodes, as well as links to socials and the ability to reach out and connect with me, make your suggestions for future episodes. Until next time, keep up the journey.